Welcome back to PreciseAlgorithmTrading.com. It is Friday, June 7th, and I found this. This is fun. Anyway, you get the idea. So it is Friday, June 7th, 2024, and let's dive in here to the markets, and we'll start with our automated trading systems like we normally do. So our Dow futures here fell today, and really the last couple days. They're not so bad today, but we were picking up there, and now we've pulled back again. And I just got an idea on something, so I'm gonna try something over the weekend, uh, and I'll just tell you what it is. So this is our Nasdaq futures, and this is a revised system. And I thought, why don't I just take this exact system and apply it to the Nasdaq or to the Dow, and maybe if that doesn't work, I'll apply it to the S&P 500 or maybe the Russell and go see what this. I'll call it this exact math, but I'm probably going to have to make a few adjustments to maybe some moving averages or something like that. But stay tuned. I'm going to see what that looks like because I don't like the fact that this has been so sideways for so long. Um, I mean, there are worse things. It could be trading down, uh, which it's technically not. It's been on an uptrend. It just happens to be totally in a box. This box, which is just, I'm tired of it. So, when I got these results from out of technically this, which was going sideways for so long, when I decided to apply that volume filter to it and ended up getting this result. I like these pullbacks better. The shallow, quick pullbacks where you don't have much time between really these two peaks or these two peaks. It's these dips, these troughs. I'm looking for a new green peak, and if those things only work themselves out in a week or so, that's fine. If this stuff that goes on for months, it just drives me crazy. So the Russell did not. Yeah, it had a trade today, but just one, and it stopped out. Just like this one, I don't like this either. The fact that it was so good for so long, and now we've just decided to give so much back. That's the kind of thing that makes me crazy. And then, so this was the new Nasdaq system, which in today's trade isn't so great, but it's not terrible. Those stop outs are really what make this thing happen. And I should really address stops at some point. Some psychology behind some stops. And then this Nasdaq is the old system, which is obviously sideways, but it's starting to put in. I mean, that breakout above this zone um, looks like it's starting to try to climb its way back out of the hole. And today's trade, we actually had a nice one there. So, all right, that's the futures and the automated trading systems. Um, let's go back to the internals of the market. So this is the True Market Insiders, and it's actually the bullish percent index from um, InvestorsIntelligence.com, which is a paid service. And I've used it in the past, but True Market Insiders puts out just the NYSE uh, bullish percent index. And if this thing doesn't move as fast as the other one that we watch on a regular basis, this thing flipped back to a new column of X's on May 15th. It's got a ton of history down here, and how to read this chart. And you can go back in history here and look at how it flips from, you can open these up, I believe. Yeah. And you can get some timing or some issues or their rundown on how this thing works. Which is, it's great information on how to use the tool and some things behind it. I'm going to go backwards, and we're going to start with the bullish percent index. That I usually end on. The industrials today didn't move. The NYA went down 0.54%. The transports didn't move. The NASDAQ went down 0.21%, and it's in a column of X's. The S&P 500 went down 0.69%. The S&P 100 and NASDAQ 100 both flipped to a column of X's yesterday. So I'm actually looking for this to start to show something similar, unless we get into that, which I haven't looked at yet, and they've already, if they flip back or start to show real weakness. So this went up 3.17% today, which is just tacking on to what happened yesterday. So there's internal strength, and these go to the S&P 100 stocks, which are, it's kind of like looking at the market and then looking at Facebook, Amazon, Netflix, and Google, and those are the ones that actually have been carrying the market. They're not the only ones. There's Nvidia and Tesla and some other ones that, you know, really have been driving the market. Well, if you look at the S&P 100 as a subset of the S&P 500, the 100 is going to move normally ahead of the 500, and so that's why I'm kind of expecting the S&P 500 to flip to a column of X's, which would be supportive of higher prices. And then finally the NDX, and it's, I'm guessing, yeah, tacked on a new X today and went up 2.13%. So there's internal strength. And with that backdrop, I want to kind of go into the rest of the market. So we've got the S&P 500 here, the futures, and since it's aftermarket on a Friday, it holds all these values, which is good. The S&P, the SPX actually went up down 5.97 points today, or pretty much break even, 0.11%. The Dow Jones Industrials went down 87 points. The Russell went down 1.12%. So let's look at that. And I'm going to put up the IWM. Yeah, that's unfortunate because I've actually got a position on. But again, I'm only playing it very tight. And for the sake, and I think I talked about this in previous talking to you guys. So now at the same time, this sort of looks like an inverted hammer candlestick. I don't know if it really matches the definition of that. It doesn't really matter. It's just the kind of a pattern that it looks like. So this could just be a trying to be a stop hunt without actually stopping. You know, we've got our position underneath the 2 ATR or as far as the stop goes. I am not going to move that. If it gets taken out, so be it. Over here on the hourly chart, it's down, but it's not, the momentum's not coming back up again yet. So it'd be nice if on Monday we just got that pop, but at this point I'm almost expecting to get stopped out, and then I can always get back in again. If it doesn't, if all of it does is take out my stop and then come back up again, then I'll reevaluate if the moving averages start to turn and things like that. What did the NASDAQ do today? So the NASDAQ really a sideways day, minus 0.23%, and still got the 1618 extension right up there, although we've got some, yeah, we've got actually a lot of room for this thing to be able to move and stay bullish uh, on the hourly, or I should say on the daily chart. The hourly chart can be a little bit bearish for a little bit and turn back around again. And um, I've talked about this before. So we got, this is the down signal. That's one pivot, and then you go all the way back here for the second pivot. So the technical stop here was all the way down here. Now you could use this mid stop, and there's nothing wrong with that. If this thing comes back and takes this whole mid all the way down to the mid stop, I think we got a problem anyway. So this, but I guess what I'm trying to say is, and there's a range. I didn't do that very well. Okay, let's use this square. There's a range, at least to there, for this thing to be able to move around in. And something to really take note of. On when you're actually in an uptrend and you turn red, you know, a lot of times it comes down and actually does hit the lower uh, Keltner channel and then rebounds off of it. the Yeah, so we wanted to have room on the hourly chart to be able to do that for stops. So there's one thing I do is tighten my stop as I start being making money in a trade. So I'll go show an example of that. So this is CCL, or Carnival Cruise Lines, and I've been in it since these signals back here, and it went up nicely, and it's pulled back, and really, if you look here, we got a down signal here. There's a pivot there. Hopefully you can see it. And then my stop's down here underneath where this pivot is. I could move my stop up to here, and I think I just might, but I wanted to have room. And you can see it got underneath the Keltner on this pullback, and now it looks like we're trying to make new signals higher. So I don't want to have my stop be too tight to up here, but I want it, so I want it to have plenty of room to move. And then, so what I do is I typically start out on the daily chart. When I start to get into money, then I move my stop into the hourly signal. And there's people out there that'll say move as soon as you get into the money and you start making money, move to break even. Um, I'm probably a little bit more aggressive than that. I won't move to break even. I'll move to where, maybe I'll cut my risk in half. That doesn't go all the way to break even, because I want to give this thing room. If I went to break even, well, I can actually show you. Right now, this position's up $2,038. If I went to break even, my stop would be at. I can't show that to you. The price of the option would be $15.20. I wish I could flip this to the price of the stock. If it was in a stock, I'd be able to show you. So this is AAT, and it's not making money yet. It's only down $119. That's what a stock would look like, and it actually gives you the price down there at the bottom for break even. So that's around 2180 is break even. And so if we go over here and we look at it, when this thing, if it starts to really take off here, 2180 is there. So if I start to go up, I'll move my stop based on this hourly chart over here. I probably even already have it. Nope, I don't. I'll move my stop all the way up to here from the daily pivot that's all the way down here at the bottom. I hope that makes sense. It's a little ugly on this chart. But what I wanted to show you with the CCL, and there's maybe a way inside of the Analyze tab to flip this to show in stock. Actually, I think it is 1670. Yeah, it is. So 1670 is the where the price is. Break even back here is at 1540. So if we go to 1540 on this chart, I guess that is break even at this point. So I could literally move my stop for Monday all the way up to here and practically guarantee that we're going to make money on this trade even if it stops out. Now, there's no guarantee that that's going to be enough to have me still make money because this thing could gap through. It's not likely, but just because you have a stop in place, that means that if the price was to open, if it opens up here and it goes down, you know, in a smooth fashion, it would take you out at that kind of a price. If it's just opens up lower because of some news event, there's no guarantee, and it'll stop you out as long as it's lower than whatever you have your stop set at. So, uh, all right, that's enough on stops, but just wanted to kind of share. So, IYT is looks like it's picking up some steam down here, which is good. However, it looks like it's going to be short-lived. And what I'm really expecting on IYT is this thing's here now, and I'm expecting it to pull back before it can take off. Something like that. So, and you might say, well, why? Well, it's because this might pull back before it can take off and mess around with this Keltner channel. When we come into these moving averages, which are these moving averages over on the daily, at least the proxy for it, you expect to hit some resistance pullback. And if this thing, all this momentum is actually going to go higher, you can pull back here, mess around, and then go. And that's going to be a pivot. And then at some point here, we'll get a new pivot that's going to be bigger than it. And you know the drill. Okay, so that's IYT, USO. Got that pullback up. We're in this descending wedge pattern. I actually would expect a pullback here to go, or sideways action before we break out of this channel. So a little pullback into this zone, and maybe just a lot of back and forth. There's nothing going to be easy about trading this if we want to go long while it's down like this. We'd probably wait for the momentum to shift on both time frames. Gold. Yeah, actually it's looking for gold to fall. At this point, I wouldn't jump on board. I'm expecting it to pull back higher. Back to either, well, I'm going to put it here for an alert. And then I'll start watching it for rolling over on momentum on the hourly chart. But now I believe we could see some seriously lower prices on oil, or gold, I mean. Down into these moving averages, maybe all the way back to where it started back here. Which could be a great trade. You know, something to the tune of 10, 15 bucks on 220 or 215 at this point. So, TLT bonds really looked like they were going to get something going. And again, they moved into that. They started looking pretty bullish and crossed those weekly proxy moving averages, and they're still green, but it, we're and we do have a new. It looks like uh, um, polarity changed. We had this high, and we had this higher low, and now we got a higher high um, coming out of it. So probably be able to trade this one off of the hourly chart. And let it build from the inside out if I can get a good signal off of some of this momentum down here. All right, let's look at a couple things. So put this back on ES. And we've gone from a lot of green with some red mixed in to red back and forth. This thing's been choppy, and you can see it actually building from the inside out the same way. So it's just not simple at this point. And there's just better, easier ways to do this stuff. But one of these days, when everything flips around, hopefully we get some sustained buying, and we could go long the markets again. In the meantime, you know, you have to pick your poison. You can go long and short, blah blah blah. Put them all together, and the overall markets are now, they turned gray with relatively bullish momentum under zero. Let's look at the VIX, which is pulled back lower, and it's in this lower zone. It'd be nice if we got some sustained, like this was for a while. Oops, like this was for a while. But you know, there's an off. Well, the Fed's out next week too, so the interest rates have, they've been the all the fear or whatever you want to call it wrapped around interest rates is driving a lot of volatility both directions in the market. Then this is the S&P 500 with the cloud, the Ichimoku cloud. We can do this too. Put in YM and /RTY and /NQ and look at it that way. Still, as far as the Ichimoku cloud goes, it's still a bullish trade. Not as convincing as something like this was back here. But at least for now, still hanging in there. Now, I wanted to show, I've got I call it Trend Finder, but so these Trend Finder buy signals, I've got a scan built for it, and I do want to show like this. And if you put together the idea of stops, you can take any trade that has any kind of an edge, which this would, and I am going to consider it because we have positive momentum under zero on the hourly chart. We actually have bullish divergence where we had price pivots going lower still, and we had actually this true momentum indicator actually is higher on the lower price. So that's bullish divergence. We're in a squeeze on the daily, which just means it's sideways price action. And at this point, I could actually take this trade, set my stop 2 pivots back, 2 lower pivots back, I should call that out. And the worst case that's going to happen is I'm going to risk from where I get in to there. And if this price was actually going to go higher and start to get back to, let's say, close this gap and say it gets to 66, we're risking somewhere like 61 to 66. I'm sorry, we're trying to make 61 to 66 or $5, and we're risking 61 to 57, which is $4, which that's a 1-to-1 risk reward ratio. And I wouldn't even stop if it got to 66. I'd let it run and just see what happens after that. Because if we break out of this zone, then the odds, or the opportunity even, really is, you can go back higher to maybe where we came from up here, and this could be a reversal. Now, there's nothing. There's you got. I don't even know what if you were going to lay odds on that. It's probably 50-50 or even less. But so what? Since we have the momentum in the right direction, and we're starting to turn green again, and we have an easy place to put a stop, this could be a good trade. And that goes for probably most of these. This one caught my eye. Urban Outfitters, and the retail market's been pretty rough for a while, but we have positive momentum over zero on the hourly chart with green candles, which means we have the green moving averages. We're above the cloud. That's what this gold line is here. And we have a lot of that stuff lining up the same way on the daily chart. We're under the cloud, but a breakout above the cloud would be additional bullishness under under the market that would potentially make it rally. There's also a lot of, for whatever reason, the retail stocks are starting to perk up. So this is actually a trade I'm going to look to get into probably Monday morning. Because I got buy signals on 2 time frames, probably more than that if I actually hunt around for it. If we flip over to the 4-hour time frame here, I mean, we could watch. It's actually gone into a squeeze as well. We could actually watch for the 4-hour to turn green, but if we do that, that means that the prices on the hourly chart are actually rising, and the longer we let that go, the more risk we're taking on. So there's a trade-off between risk and reward. So that is generally how we do it. I also look for the polarity breaks, the so far as structure goes on. This is obviously, we went from, the zigzag is coming down, and then we broke it to the upside here, pulled back hard, which is actually a great place to buy in if you get the opportunity before it starts to think about going higher. Now we got negative momentum above zero coming in, and some of that can unwind on the hourly chart while the daily just goes sideways for a bit. Now, am I going to get into PNC? Probably not. I don't need more positions right now, but I'm just kind of showing you how you can evaluate these things. IBM here, I would not be wanting to get into it unless I was totally. And again, it's just personal preference. But if you bought here, you could literally set your stop right there, and you've got your risk set, and it's under the 2 ATR for the Keltner channels, and you could, I hate to say roll the dice, but that's a little bit of what it is. This one happens to be you got an awful lot of headwinds against you because we were already up here, and what you'd be looking to do out of that, if it was going to work, is first break this pivot and then try to get all the way back up again to the top. That's a tall order that I don't really expect soon, but it would be there's some potential there. It's just not as good as the other ones that I saw. So I'm going to leave you guys at that, but that's how I typically go through and do some of this evaluation. You can see we had a pullback here, Look, this is a break of structure for me. This is a change in polarity, and the zigzag didn't draw. It drew through both of these, but obviously the price has gone higher here. So if I was going to trade off of this chart, I would look for a pullback, and I would use the hourly chart to trade off of, and certainly not the daily, because the polarity is still down on the daily. You're technically trading against the daily chart if you do this on the hourly. So, all right, I'm going to leave you with that, and hopefully everybody has a great weekend, and hopefully the markets get simpler and easier to jump onto and ride a trend. Right now they're a little, but they're a lot choppy. So until next time, take care, good trading, and have a great weekend.